Hello everyone. In today's video, we will discuss another question in which there is an adjustment of abnormal item, that too in the closing stock of that particular firm. So we have the question here. On 1st April 2016, the godown of Hindustan Limited was destroyed by fire. From the books of account, the following particulars are gathered. So this opening stock is given, closing stock is given as of 2015. Purchases of 2015 is given. Purchases sales of the period from 1st January to 31st, that means the date to fire is given. We have the value of goods salvaged. So from this information it is clear that we have to prepare the trading account for the previous year, that is 2015. We have the opening stock, we have the closing stock, we have the purchases, we have the sales. So we have to prepare the trading account for the previous year and ascertain the gross profit ratio and also the closing stock, so that the closing stock of 2015 will be the opening stock of 2016. So when we come to the adjustment, goods of original cost of 3,600 had been valued at 1,500 on 31st December 2015. So it is clear that the abnormal item has occurred in the closing stock. The difference between this question and the previous question which we discussed is, in the previous question, there was a written off amount in the closing stock. A particular amount was written off from the closing stock. So we had an adjustment there. We added back that particular written off amount, that particular written off amount to the value of closing stock, and we ascertained the gross profit ratio. In this question, the difference is that actually the cost of abnormal item of that particular part of closing stock is 3,600, but it was valued at 1,500. So actual value was 3,600 and it was valued at 1,500. So in order to calculate the gross profit ratio, we have to arrive at the correct amount of closing stock. So we have an adjustment here. What will be the adjustment? We will reduce this 1,500. We will deduct this 1,500 and we will add back this original cost to arrive at the original amount of closing stock as on 31st December 2015. And there is a sales happening in abnormal item, that is about of 2,700. Except this transaction, the rate of gross profit has remained constant. Okay. So there is another adjustment here on 31st March 2016. That means in the next year, goods worth 15,000 had been received by the godown keeper but had not been entered in the purchase account. So we need to record this 15,000 along with this 75,000 in the purchases on 31st March 2016. So now first we will go through the working notes. The working note contains the preparation of trading account for the year 2015 and also the calculation of gross profit ratio. Okay. So here we have the trading account for the year ended 31st December 2015. So we'll start with each item. The first item is opening stock. We have it in the question 27,570. We have the purchases 2,71,350. Then coming back to credit part, we have sales of 3,51,000. Now we have an adjustment in the closing stock. So I told you the original cost of that particular closing stock or that particular quantity of closing stock was 3,600, but it was wrongly valued at 1,500. So we deduct the wrong value and we add back the original value. Okay. So 51,120 minus 1,500 plus 3,600. So this is a rectification done in order to value the closing stock in the correct manner. So we get the closing stock as 53,220. And now we balance our trading account and we got the gross profit as 1,05,300. So now we'll calculate the gross profit ratio, which is very simple. 1 lakh, that means gross profit divided by sales 3,51,000 into 100. We arrive at 25% of gross profit ratio. Okay. Now we have to prepare the memorandum trading account from 1st January 2016 till the date of fire. The fire was occurred on 1st April 2016. Before that, let's just remember the adjustments that we have learned. The three cases that we have learned in the previous video. The first case was if abnormal loss are included in closing stock. Second case was if abnormal items are included in the opening stock. And the third item was if abnormal items are written off to some extent from closing stock. So here we have the first case, that means abnormal items are included in the closing stock. From the question it is clear. So what may be the adjustments that can be done? First adjustment is deduct value of abnormal items from closing stock. So from closing stock we have to deduct the value of abnormal items. Okay. Then deduct cost of abnormal items from purchases. If there are any abnormal items included in the purchases, we have to deduct that abnormal item. Deduct sale of abnormal items from sales. If there are any sale of abnormal item, we have to deduct that particular thing also from the amount of sales. Okay, keeping in mind these rules, we will prepare the memorandum trading account now. So we have the opening stock. So as mentioned already, opening stock of 2016 will be the closing stock of 2015. So the total amount was 53,220. From this, what is the abnormal item? We have to deduct the cost as abnormal item. So the cost is 3,600. So always remember that from this total of opening stock, the abnormal item will be the cost of abnormal item. The remaining amount will be the normal opening stock, that is 49,620. Okay. Next one we have the purchases. So purchases, there is an adjustment said in the question, that is 15,000 had not been entered in the purchase account. So 75,000 which is already given in the question plus 15,000 gives 90,000. There is no abnormal item in the purchases as per the question. Then we have the sales. Sales, the total sales is 91,500 is the total sales. So there is a sale of abnormal item in the question. So what is it? These were sold in March 2016 for 2,700. So 2,700 is the sale of abnormal item. The sale price is given directly. Not only the loss, but the sale price is given to us directly. In the previous question, the loss was mentioned in the question. So from that we calculated the value of that particular abnormal item sale. Here the value of sale is already given. So the total sales minus the abnormal item will be the normal sales, 88,800. Then we have a loss because the actual cost of that particular item was 3,600 and it was sold for 2,700. So it's clear that there is a loss of 900 rupees. So that should be recorded by loss 900 in the abnormal column as well as in the total column. Now we come to the calculation of gross profit. So we have the gross profit ratio as 25%. Then on which amount of sales do we calculate gross profit? It is on the normal sales. Okay, it is on the normal sales. So 88,800 into 25% we get 26,640 as the gross profit. So we write gross profit and we record this amount in this particular column. Now we balance the first column to be balanced is the abnormal item column. We have 3,600 in the debit side. Here we balance it. When we balance, it's clear that there is no balance in the closing stock. That means all the abnormal items are sold and there is no closing stock among the abnormal item. There was a stock of 3,600. It was sold for 2,700 at a loss of 900. So there is no closing stock for the abnormal item. Okay. Then we balance the normal column. We have the debit side 1,66,260 and we have the balances 77,460. That goes to the closing stock. That's a balancing figure. And also total column, when we balance, we get the balances 77,460. And after obtaining these amounts, just check that normal plus abnormal is equal to total. So in this case, Normal is 77,460 plus abnormal is 0 is equal to total. We get the total amount. So that is the preparation regarding memorandum trading account. Then what is this second step? Second step, step 2 is the ascertainment of net loss of stock. Okay, ascertainment of net loss of stock. So we have the book value of stock, that is 77,460, and we have the salvage value in the question. Value of goods salvaged is 6,300. So the total claim to be lodged is 71,160 rupees. Since there is no mention about policy value in this question, we do not go for the step 3, that is the calculation of application of average close. So understand the difference between this question and the first question we discussed. In that question, a part of closing stock were written off, and in this question, it was valued wrongly. A part of or a portion of the closing stock was valued wrongly. So understand the difference between these two videos and work out more problems. I hope you understood the concept and the problem. Thank you.